Ladies and gentlemen of the crypto space, we're live on a Monday, November 18th at 9:01 p.m. It is nighttime. It is a little dark. I probably should put an additional light on, but it is okay. I am running on about 60% battery capacity. It is the end of the day, but it is worthwhile to get this content out. Plus, I think the night stream may be going over much more well, increasingly better with the community. Get some exposure. People are out of work. People have at least some time. Kids are asleep. My kids are asleep. And now you can think about these markets and you actually have a couple of minutes to yourself for once in the day. For us middle aged motherfuckers out there. All right. All right. So this is a big topic. And it's a topic that most people don't understand, don't notice, don't see, maybe don't want to see, but also don't necessarily need to see. Um, it's dollars, it's money. Most people expect money to just be, but money is an entire story unto itself. So, especially when you're starting to understand these crypto markets, understanding money makes a big difference in what the hell is going on, or understanding what's going on in these markets. There is a finite size to these markets compared to the depths of insanity of actual nation states. So, for instance, there's only several billions of dollars here. There's less than $100 billion on Ethereum mainnet. I mean, that may seem like an enormous number when you're talking about the size of the American economy or the European economy. It's basically zero. So, what has occurred in November? Why has the story changed? Why is price action different? What drives all price action? Whether it's on Solana with meme coins, Base with meme coins, Ethereum with DeFi, L2s, Alt L1s with DeFi. What drives everything? And what is the forward looking indicator? Dollars, ladies and gentlemen. Dollars. That's why the entire story during the bear market was macroeconomics to get a sense of when the hell are the dollars at least going to be available to potentially flow into these crypto markets. Well, now we know the dollars have become available and dollars are certainly flowing into these crypto markets. And all you need is a tiny drop in the bucket of the total dollars available in traditional finance to flow into these crypto markets for some crazy shit to go down. The best example of that is Solana, because Solana is a drop, drop in the bucket. It is a microscopic, tiny economic system filled with $4 billion. At the beginning of November, there was a whopping $3.791 billion. All of this insanity you see on social media of the meme coins. Now we've taken a look at Deck Screener. We've looked at a couple of what I would say are decent meme coin. Doge makes sense to be a decent meme coin. And Elon RWA, I thought that was a decent meme coin. Not that I'm calling out a meme coin for any reason. But the point is, all that financial activity, all that depravity and degeneracy, that that need to somehow acquire capital by any means in a player versus player fashion is a result of less than $300 billion of capital inflows. So that's less than a 10% increase in the last almost 3 weeks on Solana. That's a microscopic economic system, even in comparison to other crypto economies. If you look at Base, that's even smaller. All the hype, all the hyperbole and exaggeration we hear about Coinbase and Base and all the volume, how the volume is so incredible. All the TVL is the largest TVL. I mean, look, Solana volume is surpassing Ethereum mainnet and Base and Airdrome. It's so incredible. It's glorious. It's a basically $3.6 billion economic system. That's negative sum. We go minus 1.13%. That's a forward-looking indicator, ladies and gentlemen. Solana was marginally zero sum, well, marginally positive sum, but basically zero sum, 0.21% of the week. It's finally time. It's time for the big boys to do what they do. The bigger money. And it doesn't have to be individuals with extreme money, hundreds and hundreds of thousands of dollars. This is, anywhere between five figures to six figures. It doesn't have to be upper six figures, but you could be in your mid 20s, lower 30s, and you're investing rather than engaging with markets in the way people do on Solana and Base with degeneracy and gambling and player versus player. So you can afford to look at a more investable landscape, and that's Ethereum mainnet. Positive sum, 5.54% on the week. 5% in a market that's was in the $80 billion range. Oh my God. Oh my God. The amount of capital that is flowing into Ethereum mainnet, ladies and gentlemen, is going to have the exact effect you think it's going to have. The amount of capital that is flowing into Ethereum mainnet, I just posted it on X, is three times the total amount of dollars on Solana. As in 100%, if 100% of everything on Solana was sold for dollars, this is the total amount of dollars that has flowed into Ethereum mainnet, and even more on Base, close to 3.5x in the last 2 to 3 weeks, because it's the 18th, 21st would be 3 weeks. But going on 3 weeks, a total of $12.473 billion has flowed into Ethereum mainnet. So TVL means nothing. TVL is inflated units of unrealized gains. Some call it wealth. It's unrealized because if it's realized, you got to realize it into dollars, of which the total amount of dollars is only so many that you could buy. Get it? Dollars that you could buy. So all of a sudden, that TVL means jack shit. No, TVL doesn't mean much. What matters is currency units. So the amount of currency units that is flowing, a delta, is going to cause an extraordinary amount of price appreciation on Ethereum mainnet um, in due course. What's it doing? It's obviously taking advantage of yield, which is people that are interested in borrowing, and people are going to borrow, and they're going to drive the price, and that's obviously a second order effect because the first order effect is $12 billion, and let's say 10% of it moving on is going to allocations to purchase positions. So that'd be first order. So the first order will cause more appreciation than the second order, but it's all cumulative because capital flows have a way of having momentum. So as the $12 billion, 12 point almost $5 billion in 3 weeks causes its knock-on effects across Ethereum mainnet, like a siphon. You've ever siphoned gas or siphoned water or whatever? It's going to suck capital onto this network like pretty much no one's ever seen because this is a chart that no one has ever seen. This is the untold story right now in these crypto markets. And for me, it's like, I see it. A lot of folks don't see it, but I see it. This is the largest in the last 3 weeks. This is the largest capital inflow to Ethereum, to any crypto space, to any crypto market in the history of these crypto markets. $12.5 billion. And at some point, that's going to seem like a drop in the bucket. Maybe in a couple of years, we see 50, $100 billion inflows. But as of right now, that's the biggest number. Look at that. Look at that. You see it. It's right there. Look at that. That is insane. This is insane. Wow. So it's like a siphon. It's going to siphon additional capital on, and we're already seeing the effect with some of the pillars of the crypto markets, Aave, Curve, and that will just keep on knocking on to additional uh, uh, rallies. And what the hell's what does the $12.5 billion do? Just sit there, hanging out, just for shits and giggles? It's going to do the exact same thing that it has done on Solana and Base and Arbitrum and Optimism and all the chains, except it's going to do it in a more sophisticated and constructive fashion. The capital is inherently more sophisticated when it is in such size. Such capital will exercise more discretion, more deliberation, and be more thoughtful in its deployment. Okay, that's pretty simple. You're deploying, uh, 100 mil clip into something, half a bill clip into something. It's probably going to be a well thought out deployment. Probably going to be consistent with what Warren Buffett says. If you're not willing to hold something for a year or more, you don't hold it for 1 minute. So it's not no bullshit pump and dump. It's an investment to own something, to mean something, not a degenerate gambler's play with no sophistication. Not that there's anything wrong with that. Not to be demeaning. If you wish to be a degenerate gambler, I think these crypto markets are probably a better place than the casino. Probably. Statistically speaking, everyone's fucked if they're gambling. 0.5% success rate, but that's another story. That's another story. We've talked about that topic, and I would just encourage folks to remember we've been having this conversation for years, and now it's literally the last parts of last period of time prior to seeing significant price appreciation. You know, $12.5 billion worth of inflows in 3 weeks without some serious shit going down. Okay, okay. Other interesting things going on. SCRVUSD has its gauges. This is just the beginning. I really look forward to more gauges than, frankly, dollar and SUSDE. Not that I have anything against dollar. It's a meaningful currency unit, but I have a very clear understanding of, and I've described it, how to manage the value of a currency, and you do that with interest rates. I mean, go figure. That's literally what the Federal Reserve does, and that's what countries around the world do. So that kind of makes sense that that is the best implementation in these crypto markets, of which that is unambiguously Curve Finance and DeFi.money, which is a licensed fork of CRVUSD. So all the dollar products in these crypto markets, those the only two products that I think are at the pinnacle of iteration, building a novel dollar product. And I love saying that, a novel dollar, and there was a tweet I did. Let's see if I can find that tweet real quick. Uh, that was a good tweet. Yeah, 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 yeah. Nobody ever said a better dollar wasn't also a dollar, just better. You get it, folks? You get it, folks? We've been talking about making dollars for years, and now these couple of folks have come up with a dollar product that is a dollar, because you can look at it, it literally is priced at a dollar, 0.9995. And even DeFi money, with its relatively absent arbiters, is hovering around 0.9996. It's a dollar product. It's a better dollar product and a lot of nation states out there, ladies and gentlemen. That's absolutely an insane accomplishment in a relatively short period of time, especially for something that's literally just getting off the ground. That's a crazy dollar product right here. And even you could argue CRVUSD is just getting off the ground with 65, almost $66 million. That's basically microscopic. Decent collateralization, 132 mil worth of collateral, 14.36% interest rate, which is driving whatever last I heard it was about 8 mil worth of deposits into SCRVUSD. So this is off to one heck of a start and has brought down interest rates away from the 50% mark. Um, but we're still at 995. It's very interesting. It's, I mean, I'm tickled pink how this is going to play out because this number hasn't come down. This number has been about 66, and I expect interest rates to come down further. 14% is a hell of an interest rate on SCRV and paying this kind of, if you're paying 30% and Ethereum's paying WSTE is paying what, like 3-4% or whatever the hell Ethereum's paying right about now. But Ethereum's at about 3,100, and you're speculating Ethereum's going to go to 12 grand in a year's time. You don't care about 30%. So I really think this thing's going to get leveraged a lot. Um, I mean, what, 60%, 70%, 80%? And you're expecting a 5x on Ethereum, and you just literally want to account for the volatility, and you have a time horizon of a year, and you have bands, and you manually select your bands, and you have a hell of a soft liquidation region, and the odds of liquidation are like 30% because of how you configure your leverage and your collateral, how much collateral you put down. People are going to be packing on the interest rate here. And as that interest rate goes up, that's also going to drive the interest to be paid on SCRVUSD, which is going to be dynamically set, if I recall a recent governance proposal, a little bit better. So that's going to drive that cash flow. And that's also going to juice VECRV cash flow. This cash flow is going to get really weird, especially as the collateral types increase, and especially as the synergy with DeFi money increases. Because you can't print CRV anywhere other than mainnet. So all the CRV that exists on L2s, of which there's three: Arbitrum, Fractal, and Optimism, vis-a-vis Llama are bridged. There's a fair amount. Uh, that's that's mainnet, and then an Arbitrum there's 9 mil, and Optimism there's nothing. Frax though there's four, so that's like what, 13, $14 million of the 65 and change $1 million has been bridged over. But this is not as seamless and as smooth a process as compared to DeFi.money, which ironically doesn't have a mainnet deploy. Is it ironically? I don't know. But this thing goes smooth as butter between Arbitrum Base and Optimism, like I've never seen before. This must be what folks were talking about when Abracadabra did their beam on MIM. So it has different, it's not the same interest rate. I mean, Fraxlend has adjustable interest rates as well. It's a hell of a product, and I think Frax is going to come back swinging at some point. It's departed from mainnet. It's on its own network. It doesn't have direct Stargate. It doesn't have direct like AY integration. It has the Frax Ferry. It has the Frax Bridge, but its capital flows are not as seamless. I mean, Fractal literally just came online, relatively speaking. So there's a reason Arbitrum and Optimism are kind of at the forefront of economic activity on Ethereum L2s, albeit Fractal is part of the Optimism superchain network. So, I mean, that's going to get weird from a Velodrome standpoint, but you really need that additional bridging component. That would be interesting from like a DeFi money standpoint because that's an instant integration, shouldn't it be? From a Stargate perspective, or at least from an optimism perspective. See, it's the omni-chain fungible token, what money is from DeFi money. So I don't know how that plays into the superchain implementation and their cross-chain concept, because clearly the omni-chain fungible token is a layer zero standard. So I don't know really how that works out, but it would make sense that you would see the entire optimistic superchain stack here, as well as the entire Arbitrum Orbit stack, as well as mainnet. I mean, we'll get everything in here already. Come on. It's about time. I mean, you even got Solana up on Stargate at this point. I mean, the integrations with the L2s are absolutely insane. Like going from Solana, it's just right here in layer swap at this point, and that's really, really seamless. And across with the Uniswap integration, it's just going to be really weird. This is just going to be such a really weird experience. And I say that purely from a hindsight perspective, nothing like 20 and 21. $12 billion worth of capital inflows to mainnet in 3 weeks. Oh my God. Okay, let's do some commentary. I'll continue my ranting if there's not enough comments, but we'll have a decent stream tonight. Thanks for joining on a Monday night. One up, bro. Yes, kids just went down. Yep. Um, a good day. Back to school. Start of the week. But next week's Thanksgiving, so us parents we get to sleep for a week, I guess. Arrow, good evening. How are you, my friend? Hope everything's well. Can you please go over TA levels for convex and curve? Whoa, we're going to look at some technical. We're at the bottom. So let's draw a very simple horizontal line. This is oversold maximum. I don't know. You could draw a fat line probably like right there. And if I could draw like an 8 pixel line, I would say anything below this line that's just been the painful part. It's like, oh, you're down and beating and bruised, and you got 5 broken ribs, and you're still getting pummeled. And that's below that green line. Now that was very painful to watch. I think when I took that convex position, what was it like in 23? That was at a buck 80, and then it literally fell lower. I don't know. Maybe was it a buck? Maybe it was 280. I don't even remember. That's not the point of the story. The point is this is definitely a pummeling. And we're finally bouncing back a bit on curve. It's nice to see the breakout and the strength. So from a curve perspective, I kind of drew this bit of a diamond pattern, which I believe more or less is a decent diamond pattern. I mean, it's pretty clear. You got some touch points, and that's a diamond reversal. And to the very similar type of absolutely pummeled level, the red line, man, the fact that it was low, 20 lows, launch lows, hyperinflationary decay lows. Yeah, that was painful. That was very painful. This whole region right here was very painful. And that was basically 30 cents and below, not even 40 cents. 40 cents was the damn OTC deal. Oh my goodness. Very painful experience. But now we're back in probably reflation period where people are starting to reevaluate what the hell is actually what is meaningful, what is systemic and significant. Now, it's all speculative, what catches on from a meme standpoint, and you can go by from a culture perspective, what is important to society. So when we're looking at these types of instruments, we're looking at what is important to society from a financial perspective. So the whole title of today's stream was a story of two worlds. And ultimately it's the left curve or the right curve. And so you can use your left part of your capacity to determine what is meaningful from a societal standpoint, from a perspective of degeneracy and desperation and speculation and believe in something that was trending for quite some time, and that has the potential to lift one out of poverty in a meaningful way, just like the New York lottery. I mean, you obviously have a better chance with memes. Statistically speaking, you have a 0.5% chance of not, well, what was it, a 40%? I did the statistics. You have a 40% chance of not losing all your money. 60% lose all their money. 40% don't. And 0.05% basically make anything significant, which was like 10 grand or more. So, and that's just 10 grand. 10 grand's not life changing money. So, from the statistical perspective, okay, I mean, $100, pull out 10 grand, 0.5% of the luckiest people doing the gambling, or having a narrative, having a story, being able to actually tell people what you're doing and why you're doing it and not sound like an idiot. Just saying, I mean, you can tell your friends and not sound like an idiot, but you're not going to be able to tell, uh, mom and pop and grandma that you invested in Skibbity and oh my God, what's the hot one? What's hot tonight? Let's take a look at what's hot tonight. Peanut Musk. It's pretty hot tonight. 7 million%. Well, that's definitely pumping up. 11.31 bill market cap. But age 4 hours. No, that's horrible. But Peanut is at 1.6. Get the fuck out of here. Is it really at 1.6 billion? That's insane. Okay. I invested in Peanut, Grandma. What's that, young man? Tell me about Peanut. I don't know. A bunch of dumb motherfuckers on this forum called Telegram told me to buy it, so I bought it. And I turned $50 into $5,000. Oh, that's so incredible, young grandson. I'm so proud of you. You did so well. Okay, fine. That's just a very speculative um, role play of how that scenario may go down. And then again, I don't know how well the right curve conversation would go down either. Most of the time when I talk right curve to anybody, their eyes glaze over and like, what the fuck did the captain just say? This motherfucker's over here talking about how to print dollars and shit. So I don't think my concept goes over that well either. So basically, but that's the approach. It's left curve or right curve. And I choose right curve. Okay? I cannot have it any other way. I hope this helps, Arrow. It's very simple technical observation. Just looking at levels, there's no real moving averages to inspect. I mean, maybe from a daily 200, but that's just a breakout. So you're talking about resistance on the monthly, which I saw at the 10 on the monthly. So you get over like four. Just remember we were getting over 32. I was talking about on the daily. It was the daily 200. Yeah. So on Discord, I was telling you guys, you get above 31, 32, and they start to break out here. You're going to start to push towards the 50, which is about 42 cents. But you get above this time weighted average price on the monthly, which is you get about 45 cents, and you start to see some pressure upward. Um, that's where the fun begins from a moving average standpoint, because everyone sees this stuff. Everyone sees the same technical data. 45 cents and you're going up. Is there any MAs? Maybe you get the 57, but after that, 200 on the weekly, I think that's it. I think that's it. You get above 45 and you're going to 45 and you're going to what, 55? So that's a 10-cent rip. And then that's it. That's your last level of resistance before significant numbers, because there was only one interaction with the 100 on the weekly for curve. basically in its entire history. There was no 100 earlier in its lifespan. You could maybe extrapolate. Not really. It's the whole point. That's why it's not drawn. There wasn't enough data points to actually draw it. So there's only one interaction with the 100 on the weekly ever. You break this to the upside in 2024 terms of circulating supply as compared to the circulating supply in March of 24. I mean, March of 24 compared to now, after all this depreciation, how much supply has been locked? There's going to be a very different price action considering the increase in dollar supply in this market. It's going to the 200 on the weekly this cycle. It's not even, it's not, there is zero rationale to indicate otherwise. I don't know what the path is to the 200. And then where's price discovery? Is that price discovery? Barely have the start of a 50 on the monthly, a buck 35. All right, so you go above the 200 on the weekly for curve. You're in price discovery because there's now you're in no relative, you have no relative sense from a moving average standpoint. You can come back to levels, but if you come back to levels, you're basically in price discovery also. What you had a bit of a decaying lower highs here. Sounds like a descending triangle. Maybe there's a bit of a horizontal chop, I guess, from a bottom end. But you get above the buck 30s into buck 45. Yeah, I mean that's pretty much clear skies until maybe the top end of this region, $3, maybe here. I mean we could draw a couple of lines here for the fun of it. Maybe, yeah, there's a decent line there. Maybe there's a bit of congestion there because you got some resistances over here back in June of 21. So you got maybe two lines. And then obviously you got your all-time high, which you could probably put somewhere right around there. So there's your three levels, in my opinion. I mean, that looks like three regions of price congestion, as I would discuss it in verbally. So once you get past your technical moving average levels, you want to start to engage with these price action levels. Buck 40, 257, 361. Basically, volatile all-time high, not like inception inflationary decay. This whole shit doesn't count at all with regard to analysis inspection. You get above, we're in the $6 range, and I think everyone's going to be like, well, what's going on? Do we do price discovery for curve? Do we get there? But there's only one answer I could possibly have for that kind of statement is I sure as hell want to find out. I want front row seats. Okay. Hope that helps. Suffice it to say, without going through an entire convex inspection, the same thing applies there. Uh, you can only imagine what the governance and voting would be like under such conditions, because as the curve price goes up, it becomes increasingly valuable to be able to rent those votes. So that's going to drive a lot of activity, especially for um, protocols with POL, protocol and liquidity, because they're generating revenue from volatility. They're going to recycle it. It's going to all go to votes. So I'm very curious how that plays out. And obviously, we've heard about the convex announcement today. So I'm certainly curious how that works out as well. But we're all here and we will all continue to talk about it. It's the hottest topic there is, in my opinion. I stare at these crypto markets all day long, and I'm here for the best risk adjusted returns with regard to the amount of work required. and I clearly stayed from a meme perspective, which worked out pretty well. I had some dust on Solana. There's like 800 bucks worth of bonk. I turned that to like 45 and somewhere settled around 25, 2600. This thing died. A bunch of these things died. It was like 2600 bucks. All right, I doubled the money. Almost two and a half times the money. Playing around with some absolute dog shit. That's just I'm not. You have to sit. You literally have to sit in front of the chart, and it rips a 2x, 3x sell. Next, 2x, 3x sell. Next, all right, and then the odds of you catching a mega rip are like a freaking peanut. They're very slim to none. But in any case, it's almost one big move. Look at the time frame in this move. Date and price. So we'll go from here. There we go. So date and price. We're literally talking. Is that 22 hours? 22 hours. That was the whole move. 22 hours. So you literally had to sit there and somehow stomach this leg, another leg, and then this horizontal chop. 22 hours, and then the third leg. What, the third leg? And somehow know to get out of the third leg. Okay. So that is definitely a work required type of opportunity for what it's worth. For a little peanut, the squirrel, sitting at $1.59 billion market cap. Wild. I happen to make those couple of bucks on Doge, which I think still looks good. No, it doesn't. I take it back. Jesus Christ. I did expect it to go through the 236. Did I draw that? Oh, I drew that non-logarithmic. I didn't expect it to fall through the 236. Oh, that's very unfortunate. You know what? I'm expecting a damn meme coin to stick to the fibs? This just now you're in uncharted territory. You're in price discovery to the downside. Now, when some large actor comes in with like 5 mil and rips this thing back to like $11, oh my God, in a single candle. Yeah, it's gonna run, but that's completely unpredictable, and that's a dominant actor executing, a predatorial maneuver, a territorial maneuver. Okay, so you can't predict such things, nor does most people have the capital to execute such a maneuver. Hmm. Hey man, hello, hello from anywhere and everywhere. This is the planet. Captain going out to the planet here. Big planet of folks that are engaging with these crypto markets, accessible to all nations, but not of any nation. Y'all know that story. Cold world present and accounted for. Much a pleasure. John Cap, I got hit hard with tap and just lost most of my Fanta bag with the Polter exploit. Yeah, but you didn't get hit hard with tap. Tap is going to launch sooner or later. And I would argue it's probably going to reinflate. Well, if not, I would not, I would say the odds are not for loss of capital in the long. I guess that's the most appropriate way to say it. I would expect in the long run that capital to reinflate. That's my opinion. I would hope so as well because I had exposure to that too. Phantom bag, polter exploit. I don't have sentiment regarding that. I didn't know anyone was engaging on Phantom other than from a gambling perspective and never heard of a polter. I won't touch Phantom really till Sonic gets deployed. Um, Primarily looking forward to Kingdom expansion to Phantom. That's my 2 cents there. I'm not trying to be reactionary, but do you have any mindset advice for dealing with exploit setbacks? Um, it's very, some would argue it's very hard to not get caught up in an exploit. The only exploit I've been caught up in is tapioca. And I would encourage less deployment rather than more concentrated deployments. Um, and that reduces exposure, more concentrated exposure. And if you focus on risk adjusted, I think folks would do very well in these crypto markets. For instance, 5 grand into 50 grand over the course of a cycle after what, a 20, 30x rip, and it collapses. And maybe you capitalize, it's a liquid position, so you're able to capture about 10, 15x on the money. Because these are all reasonable multiples from a crypto space perspective. And if you come out of a crypto market cycle with a 10, 15x rip on even 1,000 to 15,000, and then you retain that capital, you're investing because you're working and you're accumulating over the next 2, 3 years until the next, you know, parabolic phase of this market. Then the 15 goes to 100, and you're in your 20s. Now you're 28, and into 2032, the 100 goes into 500 and 6, 700. And take your time. Take your time. That's the most important mindset advice that I could offer that most people struggle with. Take your time. When you rush, you get caught up in the frenzy and the emotion of things, that's when mistakes are made. Now, I can look back in hindsight all day long and say I could have and should have done things differently. I'm quite content how things went in 16 and 17. I wasn't ready in 13 and 14, but I was ready in 19, much more prepared at 19. So I literally come from like 16, 17 to 2021, more so 2023, 24. So I think in terms of like 16, 17 compared to 23, 24, and that is a time period that you really should take to heart and how long it takes to mature and to grow into someone that's in a position to manage capital emotionally to some degree professionally. It takes those amount of years to start making better decisions than worse. And that, maybe that comes from being a parent also. Because once you're a parent, you make different decisions. I certainly wasn't a parent at 16 and 17. Parent in 19. Parent, I had my one daughter in 19, and I unloaded my rollover IRAs. Eh, I don't think I was nervous. I don't recall being nervous about doing that. The rollovers were boring as fuck. I had decent diversified stuff, but they weren't really going anywhere. So I rolled it over just in the Bitcoin. I don't know. Hindsight's a bitch. Could analyze and assess hindsight infinitely why we did what we did. Okay, so setbacks. What's the what are some additional thoughts that I could offer? Setbacks are irrelevant. Turn them off. The emotion you need to reinforce in your mind is meaningless. What's pertinent is what's next. What's the learning experience? Listen, it was 2017, and I had look, I was all my capital is in like a brokerage account, and then I told you guys just now that I liquidated the rollover IRAs in 2019. It was 2017, and I had like a quarter mil deployed to this company called Namaska Lithium, and that motherfucker went bankrupt. I mean, bankrupt, like hostile takeover, and it was still the best investment. Goddamn, had the private equity. That was incredible hostile takeover. It's got to be one of the most important lithium investments in the Western Hemisphere, Namaska Lithium, that refining operation. 10 years, 15 years, 20 years. But they went bankrupt. That was a quarter mil down the chute. So how do I look back on that? It was a good investment. In hindsight, maybe that's why I did what I did in 2019. I was fucking pissed. I was pissed at private equity because I knew exactly what they did. You know why they went under? They went under because the price of employment in the region went sky high because the damn private equity drove out the employment to put pressure on the company so they wouldn't meet their deadlines and they'd end up having to declare bankruptcy so they could come in and scoop them up for pennies on the dollar, driving out the real tail investors. So I got very salty with equities. That was my um not there wasn't micro caps, they were all mid caps, big companies, with big capital raises, millions and millions, not the pink sheets. Some of them were the pink sheets, but the point is, this was the beta plays and the stuff that was supposed to be, not mainstream. This is the not status quo. This is the contrarian bets that I had back in 17. And battery metals. This was Tesla Model S and Model X. There was no Model 3 back then. It was a very different environment, very different world. So, because of that experience, I was so damn angry that I liquidated the rollovers 2 years later. Whole goddamn thing's going to go up. This whole market's going to go up. It's going to do exactly what it did in 2021. The whole system's going to inflate. $12 billion just rolled into mainnet. You have a moderately diversified portfolio in fintech products. And if you're so inclined, some absolute insane dog shit meme coins for the culture, then that's a good portfolio in the crypto markets. And don't be surprised if the damn meme coins outperform your actual financial investments. And guess what? Guess what? If you have a portfolio and your meme coins outperform your financial investments, good for you. And what would I do? I'd still have the damn fintech investments and I'd underperform because I have a point to make and I have virtues to uphold and I have a name to uphold to be rational. And it's okay for me to underperform. I don't need the most money possible. There's this it was a Wall Street money never sleeps. Money. Yeah. I don't know if you remember that scene. Let me pause it so it's not playing. He says, what's your number? I don't want more. And I know many people probably would say yes. He says yes in that scene. Josh Brolin, that's such a goddamn good scene. What do I say? What is my number? Wake up money plus inflation plus kids' college tuition times two. That's literally written in my business documents that I wrote. I don't know if you're new here, but I literally wrote down business rules for operations, which we've talked about over the last couple of years. Coming in at 70 pages right about now. A lot of work. But it was like cost of inflation times two to account for the run rate of inflation over the next 12 years. And I made a projection about how much money I want heading into the next 12 to 18 years. he says, "What's your number?" And that motherfucker says more. If someone said, "What's your number?" to me, I would give them a number. I'm too rational. I'm too rational. I give them a number. I don't have time for this. There's only so much time we have on this planet, and more. That's tiring. I don't want to put in that kind of work. Okay. Hope that helps. Digressed a little bit, but that's a decent story. Let's look at Gary Network. Gary Network says disclosure crypto. What is this? Gary Network. So what do we do on the rational stream? For less than 5 mil market cap, whatever, that's fine. Could be a micro cap. Supply doesn't mean much. Let's see what kind of product it is. Okay, Solana product, Solana network. Let's see what the product is. Oh, I think I've seen this. Um, fintech business, products and services, token as maybe a medium of exchange type thing. Is this an in-house currency unit? So what kind of product is this? This is Chuck E. Cheese coins. And that's cool. That's a product. It's not an investable product for someone like me because I look at crypto and I'm like, fintech, dollars. I want to understand what a dollar is and how to print dollars. But this is going to be everywhere. Do you understand? Everyone's going to have a goddamn economy because it drives incentives. You could literally finance behavior, monetization, gamification. That's what all this stuff is. And this looks like what games? Uh, content, content, as well as what's content? People create social media. People, individual created content. Seems like a nice product. There you go. Makes sense. Southeast Asia, big social media over there in Asia and Southeast Asia. Aptos, okay. Big 15 mil. I mean, it's not like big numbers, but that's cool. They raised another six. It looks like they have a decent, robust roadmap. Where the hell's the rest of the roadmap? Uh-oh. Oh no. Into 2024. Wait, we're in November of 24. Where's their 24 checklist? Red flag? What have they done in 2024? Now, I'm not going to do that due diligence. I would never invest in anything like this, but that's another story. But Q4, yeah, where the hell is the rest of their roadmap? So, very careful with investments. Do your due diligence. This is exactly why I don't like people. I don't like roadmaps. I want immutable software that's going to exist into the future. And it just so happens there's a team that has a vested interest in the protocol that is continuing to iterate on it, making more immutable products. And that's exactly why Curve stands out amongst them all. The granddaddy of immutability. Velodrome's coming in, significant product across the optimistic superchain. Velodrome over aerodrome is what I would say at this point. From a scale and scope and exposure perspective, and not a product like that. That's my 2 cents there. Jeff, hit the like button, give him the respect he deserves. Thank you, I appreciate it. I mean, it's just a conversation. We're just shooting the shit here, ladies and gentlemen. Just getting some stuff off our chest. We're venting. Feel, feel. Thank you. DeFi Poe and thoughts on protocol. F of X. Big deal. Big product. V2. Incredible product. So I'm very excited about it. I have my exposure there. I have my exposure through Concentrator. It was a nice chip. That was a 1%, which maybe I bought it a little earlier. I have a decent size. It's reflated a little bit, but that was a 1% play. What have I said? 1% to 10% changes everything. That is a classic words of wisdom type statement. I stick to it, and that means I do have exposure to F of X. Maybe it's not FXN, but it's certainly Aladdin DAO product suite, which eventually should come together into some cohesive, coordinated type of organization, like a super token of sorts, maybe, which is what we've heard from the DAO over the years. So I definitely keep close tabs on what they're building. I sure as hell know what kind of governance control they have at the Cleaver level. Dear Lord, they control Convex. I mean, they're right up there with Frax, dominant ownership of Convex. What more can be said about that? So they're deeply embedded in the Curve ecosystem. Big deal. Derivative product ultimately. Then they have their own primitives, but clearly Cleave is a derivative, and they could use that derivative on top of their FXN suite primitives. So that's why it's not just the derivative protocol, the Latin DAO. That man, it is an un they're unsung heroes. They deserve to be talked about more. No biz dev, no marketing, just what they did from a Cleaver perspective. That could come back in 4 and 8 years and be like, holy fuck, no one talked about this company that owns like significant double-digit percent of Convex. So they deserve more credit, and the market will should eventually respect that and appreciate it at some point. Hope that helps. Steak or howdy cap, much pleasure, much pleasure. Good evening. Funny dinosaur, John Steps want to join my I think a lot of people want to join it. We all need a little bit of therapy. Frankly, if you're sane in the mind, you need therapy too. How do you think we got to this point? What do you think this session is to me? This is certainly a therapy session, allows me to organize my thoughts as I'm trying to tell them to you in somewhat of a coherent and consistent fashion to tell a story. And that story resonates with so many folks, 280 people on the stream, because it makes sense. And it only makes sense because I've told this story and I've refined this story. So we actually have an understanding of these markets. Therefore, this is a therapy session. Do not know which one you're referring to. That was a fair amount of time ago. So obviously these posts come in, these comments come in, and I get to them like a half an hour later. 279 people in the stream. If you're on X or on YouTube, please feel welcome to post a comment. I'm more than happy to talk about anything on your minds. Otherwise, we will wrap up the stream for the evening sooner rather than later. Get those comments in, ladies and gentlemen. That's what keeps the stream fun. Basket deck, Cap, do you think once the major banks like JP Morgan and others are able to run stablecoin businesses like 2025, they will take substantial market share from traditional issuers like Tether and USDC? Uh, I think the market chooses the product it wants. Backed, BAKT was the one who the Intercontinental Exchange, ICE. Heard that name a while back. It went nowhere. JPM and the big banks could come up with a stable coin, people are still going to want to use what they want to use, and the market chooses whether it's USDC, Tether, or one of those products. They don't choose, the market chooses. Maybe the market chooses CRVUSD for all I know. That's exactly what I think this entire cycle is going to be. I think we see the great endogenous stablecoin print. Is it not inevitable? Is a bubble, because that's what a bubble would be, a credit bubble in these crypto markets, not inevitable? We've never really seen one. Whereas, 50 bill endogenous stablecoin print, now we're talking about a bubble. So that they can't control necessarily. Um, they can't necessarily control these endogenous stablecoins. And that's going to piss them the fuck off. And I like that. I want to see what happens when they're like, oh, we can't own CRVUSD because just it's already distributed. We just can't get the tokens. There isn't enough circulating supply to acquire governance control. That's that's what I want to see, and I pay a premium for those front row seats. And we'll see. We'll be here talking about 2025. That's for sure. DeFi Poland, yeah, I agree. A lot of DAO is crazy. No one notices them. Yes, that is the case. Not a bad thing, not a good thing. Credit will be given when credit is due, and it certainly do now, but the market will respond eventually. They just have too much control, and Curve will continue to do well. 38 cents. People hated on this motherfucker for so long. Horrible, horrible. They didn't understand. They didn't see it for what it was. They thought it was a founder dumping on people. They didn't realize you had to. How you going to run working capital? How you going to generate revenue? If you get it 15, 20% on 100 mil, it's 20 mil a year. There's your financing for how many people? I don't know. If you're paying people three, four, $500,000 a year, it's not the largest workforce of contractors. Just food for thought. Just some very rough numbers there. Very rough numbers. I just don't think it was malicious. But I do know that I'm a contrarian, and I also think what the general public thinks is almost always dumb as shit. So if the general public is salty because of price depreciation, because of the curve liquidation, I'm in the camp of they're probably wrong, and there was a more reasonable story at play. That's just me, and that's the story that I always align with. Brian Morrison, much a pleasure. Happy Monday, Captain. Much a pleasure to you. Cabas Cadet, do you have any hypothesis on what the CVX YFI thing is about? Well, frankly, they're all old school. YFI was original Andre Yearn, obviously. I mean, I could see some magic between YFI, Yearns, Stake Dow, and Julian Bouteloup. With the the iterations that Stake Dow has done, very impressive. Dare we get like a Cleve in the mix with Aladdin? And you really bring all these guys together who pretty much own or control significantly a Curve Federation. Convex, Yearn, Cleve, Staked Out. What? I mean, that's the dream team right there of liquidity financing, credit, dollar liabilities, as well as foreign exchange, of course. Of course. So that literally covers what, three, maybe four derivatives in there. Of course, there's derivatives in there, CVX, CRV. So you got literally four FX, credit, dollar liabilities, liquidity financing, and derivative. You got five. Is that everything? Is that the whole goddamn stack of FX business? I mean, is that? It is. Holy shit. Everything else is just one off. I mean, literally, Aave's money market, credit, or Uniswap is foreign exchange, literally uninvestable jack shit, anything else. Um, Pick another product, probably a derivative of some kind. Perp exchange derivatives, credit, isolated money market, fork of Aave. I mean, literally, Curve Federation is a fully integrated product suite, a full stack of all the crypto fintech products. Most hated protocol in the crypto space. Yep, that's exactly what I want to own. Thank you very much. I'm a contrarian. That's it. Everyone's wrong. I'm right. And I put my money where my mouth is. And I'll look back in a couple years and I'll be able to answer the story whether that was a good choice or not. And I like to think it is. It's literally it hits all the fintech products, period. What more could I possibly think? This thing will reverse. You're going back to the dollar ranges. You'll start to get to the price action levels. And then everyone will be like, what the hell's going on? You'll be back at $6, cranking out 15, 20% of the money at the SCRV USD level. BECRV will be cranking out another 20%. Oh, god damn, that would be crazy. Oh, god damn. Ooh, $6 still cranking out 20%. Oh, I can't. That's what folks don't understand. That's the multiples. The multiples. They're like 20%. What's 20%? But if you're going from 30 cents to $6, a 20x on the money, and you're still making 20%, I know that doesn't do what 1,000 to 20 grand, 20 grand, 20. I mean, frankly, look, you have 1,000, and if you're a young kid, and it's hard to get a sense of levels and numbers, 1,000 at a 20x is 20 grand. 20 grand at 20% is $2,000 a year, $4,000 a year. In theory, you're making 20%. Let's say it blows off and it's like it blows off to 20. It does some disgusting shit and it absolutely collapses and it does Bitcoin style, like somewhere between 3 to 6. It collapses to 5. So you're in at 30 cents to 5 is, let's say, 15x on the money. So bear market bottom, 15x on the money. So 1 to 15, and you're making 20% of 15, you're making 3 grand a year, bear market bottom, off of $1,000 investment. So you literally, what does that mean? You invested a grand, you're making 200% on your money per year. 200% on your money per year. I'm just a very hypothetical series of events, but that's more or less kind of what I went through is slightly like the money. And then it crashed like what, 82, 83, 85% maybe. And I did a tweet maybe like 2021 is if your portfolio, when it crashes and you're still making, and it's still at a one hell of a disgusting number, you make good choices. And I believe that that is okay because most people never sell the top and most people sell the bottom. Most people never realize anything or make decent choices. So if you don't sell the top and you made good choices buying the right things that are monetized with higher lows, that our systemic infrastructure, our real fintech do produce cash flow, our desired products and services, you make good choices. And it doesn't have to be the most money possible. It just needs to be higher lows. And then you'll have a good story to tell. And that's important in life to be able to tell a good story and not tell a dumb as shit story. Okay. Hope that helps, ladies and gentlemen. On a Monday night stream, Monday, November 18th at 10 p.m., 200 195 people made it to the end of the stream. I appreciate each and every one of you. And now we are all a little bit more rational together because of it. I wish you all a good one. Stay rational, and I will see you all later this week, at least on a Wednesday, maybe for another night stream. Until then, peace.